And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. It's time for the market prep for Tuesday, January the 31st. We've made it all the way through January. Spring is right around the corner, at least I'm hoping so. As always, our focus is on accurate context, good risk management, and patience. My name is John Hoagland. Thanks for trusting me with your time. Just looking through the comments here, I'd like everybody to say a special prayer to Dan Trader and his brother who is having major surgery today. I know we'll all say a prayer and keep him and you, Dan Trader, in our thoughts. I've got a couple of brothers. I love them very much, and I can only imagine what you're feeling right now. So as far as economic numbers this morning, the FOMC meeting begins today, 7:30. The employment cost index came out, giving a little bit of a boost to our equities this morning. The fourth quarter of last year, the forecast for costs of employment was supposed to increase, but 1.1%. It came out actual 1.0%. So slightly lower cost increases for employment at the fourth quarter of last year. We are still waiting for the 8 o'clock Central Case-Shiller Home Pricing Index, the FHFA Home Price Index. 8:45, the Chicago PMI, and 9 o'clock, probably the biggest of the numbers today, the consumer confidence numbers. U.S. stocks were continuing lower prior to the number this morning. We are, of course, as we all know, facing a slew of economic numbers, FOMC actions, earnings. All of these things are going to be affecting the markets. That's why on the title this morning, I suggested we all buckle up. It may be some big moves. It may be a nothing burger on some of these things. We don't know. And as we say here on the market prep, anything can happen. ACH, that's one of our acronyms here. Earnings today, nothing major, but Exxon beats earnings per share and misses on revenue. Pfizer, I'm kind of surprised, beats on earnings per share, but misses on revenue. They've got some warnings for the COVID vaccine, much less demand for it than they were expecting moving forward. McDonald's beats on both. UPS misses on revenues, and Caterpillar misses on earnings per share. After the close today, Amgen, AMD, as we all know, tomorrow after the close, we have Facebook, Meta, that is due out, and then Thursday after the close, Apple, Amazon, Google, among a bunch of other ones. So tomorrow is a really big day as far as earnings are concerned, and we all need to be well aware of the economic numbers that are coming out the rest of this week. Of course, the FOMC release tomorrow, and probably the other biggest one will be the unemployment numbers on Friday. U.S. dollar, at least before the open here, may have seen its lows for a while. It was at its highs this morning before the numbers came out. It's taken a pretty deep stab to the downside now. It was recently off. It was on its high for the last week, off its January 25th lows. So pretty good dive to the downside for the dollar, and it certainly has affected some of our markets here. We're going to check that out here on the charts in just a couple of minutes. Looking at the VIX a few minutes ago, it was up slightly at 2019. We've got the dollar index now down on the day, 102.2 last I checked. The yield on the 10-year softening just a little bit, but still hanging right at 3.5%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here, as well as prayers. Dan Trader, I hope you'll keep us abreast of what happens, and I know we're all going to be praying for the best possible outcome. Subscribe to our YouTube channel. You can get notified when we do go live. Good morning to everyone. Timothy Marks first in the room. Scott Saw, and he conquered. Shaw Cunningham, the Rooster, Brody Caprice, my brother Rick, I love you. Dan Trader, we all have lots of love for you. Kevin Laffey, lots of love for you. We love everybody here. Terry King, Kevin, I have a feeling something very interesting is going to happen in the pork belly market today. I knew it. Dan, of course, we are going to be praying. Fred Decker, good morning. Stephen, Jason, Charles Hagel Matters, good morning. Marcelo, Vince, caught a small goldfish before the number. Nice job, Vince. Sarah Hall, prayers and love to you as well. Travis, Philip, Mike, good morning. Trading Research, George, Kevin, Orion, good to see you this morning. Sarah Hall, lots of folks talking and saying prayers for Dan Trader and his brother, Andy Bleed Gnostic. Good morning, Will. Okay, Will, when you're looking under charting, you're going to see legacy charts and you're going to see chart. Use chart. If you're looking at legacy charts, you're not going to see the TPO charts. I will try and show you that on the forecast this morning, but if you still have issues, make sure you come to group coaching tomorrow and we can go much deeper into it. Alejandro, good morning. Eric, good morning. Too Humble. Yes, we do have Make Hogue Money today. Matt Hoyt is with us this morning on the forecast. He's going to be joining us for Make Hogue Money, and we're going to have a very interesting and informative look at the Andrews pitchforks, which Matt uses in his trading choices and his trading decisions. We've got a lot of folks that have become very interested in them since they have seen them on Matt's charts in Make Hogue Money. We're still going to try and make money, of course. And we're going to have Matt talking about how he looks at and uses the Andrews pitchforks. Lean Hogs, the new tech. Good morning, Theo. Richard, finally able to make the forecast. Hey, good. I'm glad you're here, Richard. And Columbus and Octoraps and Will R. Yes, okay. Let's jump into the charts relatively quickly here this morning. I know we have a lot going on. Here is the link to get into the Zoom meeting. Why is this doing this to me? There it is. To get into the Zoom meeting for Make Hogue Money, that's where you're going to be able to vote. And there it is. I'll put this in the chat. Don, I would never forget you. There we go. All right, there's the link to get into Make Hogue Money, starting approximately 8:20. As soon as we're done with the prep here, we'll go right into Make Hogue Money. Looking forward to seeing everybody there. So here we go. We're going to jump into the charts, starting with the daily in the S&Ps. Seeing a little bit of a change here in the in direction. Just looking at the daily chart here, we can see that the upside structure and short time frame is still to the upside. We've got 1, 2, 3 points of contact on this trend line down here. We are currently wrestling with the 200 session moving average on the 30-minute chart. We took a look down to it. We've had some information come out. We've driven away from it. If you didn't notice, I'm wearing my rally sweater today. Hopefully it'll work, at least for those that are invested in stocks, right? So yesterday, the drop on the in price did not attract a lot of new sellers. We only added 2,500 estimated in open interest. To me, that's feeble for what could be viewed as a reversal pattern. That's not a very strong increase in open interest in that direction. So The market took us back to this trend line. We've looked down to the 200 session. We're going to be opening back above that trend line in a market that overall, in short time frame, has upside structure to it. Again, anything can happen. We are still waiting for a couple of releases with the homes, Chicago PMI. We're going to see and some reaction here, perhaps on these Case-Shiller and FHFA home price indices at 8 o'clock. So we'll see if there's any reaction to that. Take a look at the 30-minute chart here. So when I sat down this morning, we had overnight inventory that was pretty deep to the short side. Well, that has changed. We are now looking like we're going to be opening in range, in value. Okay, this is not a true late spike down here. If you were wondering. And even if it were, it looks like we would be rejecting lower prices because we are probably going to open above. Okay, good. Hegel Matters. Thank you for helping with Will. You've got it now, Will. Good. Excellent. All right, so... but again, Will, there's some adjustment that you may need to make to those, and if you are still looking for it, tomorrow's group coaching would be a good place to go through all that with you. I'll try and put the group coaching link in here for tomorrow's session. Group coaching will be the second link in chat. So you can get us to there. So we can get you there. Hang on. All right. Okay. So now you can get into group coaching tomorrow, Will. All right. So again, the 30-minute chart, overnight inventory has now been adjusted. We're going to be opening in range and in value, suggesting that I stay patient. Okay, look at where the market is right now. There was a support level there yesterday. It broke down through it. It's now a kind of resistance level. But is that going to matter? I'm not really sure. The very short time frame structure in this market is to the downside. We've been putting in lower highs and lower lows. What's going to change that today? Where does that change? I mean, we've got a pretty good reversal pattern running here. Take a look at the TPO chart now. So in a normal variation day, upper extreme of the initial balance is the high of the session from yesterday. Normal variation, neutral day. This is a neutral day. That we did not close in the late spike. 32.50 is the settlement price. So we did not necessarily close in it. Is that a true spike? At this point, it doesn't matter because we've already rejected price below that level and we're opening in value. Are we going to just remain accepting of yesterday's value or are we going to reject it? That becomes the question now. There is still, and much more likely this morning, the possibility of downside repair. We took a look down to this little hole here in Thursday's profile, but now we're showing signs of rejection of that. So I'm going to stay patient. I'm going to look for opportunities as the day goes on. If we open inside range and inside value, it slows me down a little bit today. And again, we do have a lot of information yet to come out. So that's going to change by the minute, if you ask me. There's going to be some possible opportunities. I'm not going to be holding any positions into consumer confidence today. That's again at 9 o'clock Central. We will be in Make Hogue Money at that time, so we'll see what we can figure out. Again, the situation has changed this morning. We were looking lower, gap lower, possible potential for repair. But that potential for repair lower remains. But if we do open in range and value, I'm going to try and stay patient, look for opportunities as the market establishes its range. Take a look at the crude oil. Well, we got 10 seconds before The 8 o'clock numbers come out, the housing numbers. Let's see if there's any kind of reaction here. Housing price index year over year, 8.2%. Month over month, down 0.1%. Case-Shiller, month over month in November, down 0.5%. That's relatively anti-inflammatory, we could say. Getting a little bit of reaction here. What is it doing? It's keeping us in value from yesterday, at least initially. Let's move on to the crude oil now, which I think has been a little bit of a shocker for a lot of folks, myself included. Didn't see us getting down much below 80 with the White House saying they're going to purchase at 80. Well, we don't know if they're actually doing or what they're doing. So yesterday on the push to the downside, adding 14,000 in open interest. Volume was okay. It wasn't tremendous. The open interest indicates that we had a whole bunch of new selling coming into this market. We've got acceptance below weekly kickoff low. I see space down here down to about $75 on a potential next push to the downside if that is indeed what is going to happen. Overnight inventory is looking short here. We started here. We are here. We've already reconciled some of it. We've opened with a gap, so we've got gap rules in play. Short time frame structure is to the downside, so we've been putting in hot lower highs and lower lows. Look at all the references that we traded to yesterday. Naked point of control, little gap, naked point of control. We've still got more down below if visuals are going to drive us that direction. So gap rules apply initially this morning. We can't close the gap relatively early. We look to get into the direction of the gap, which would have us looking to the short side. Take a look at the TPO chart now. Normal variation day. The initial balance was penetrated on both sides, but not until very late in the day. And this is not a true spike. We closed above the late spike at 77.90. So we already showed signs of rejection of that. Now we're opening lower. And just the fact that we're opening with a gap is indicating potential acceptance of lower pricing. We talked about that, if we can't close this gap relatively early, we can range here or we can continue lower. We looked at $75 as a potential target for a continuation move to the downside. There was a normal variation day yesterday, a lot of excess on the high, poor excess, low excess, low excess, low excess. This market has been virtually telling us, well, the downside auction is not finished, and here we go. Okay. Here's the NASDAQ. Short time frame upside structure still remains intact. Open interest yesterday, less than 100. In change to the upside, but that's just really inert. There was no change in positioning yesterday unless there were equal longs and shorts entering or getting out. The 200 session moving average here on the NASDAQ is above price, where it's still wrestling with the S&P's price above the 200 session, where on the NASDAQ on this daily chart, the 200 session is below. What does that tell us? Can tell us something. We'll find out over time. Check out the 30-minute chart. Overnight inventory short, back into range, back into value. Try and stay patient. Better trade locations are likely to come as the day goes on. The potential late spike, it was not a true late spike. Again, I would be kind of viewing that as a potential late spike, and we're opening back above it, telling us that there's possible rejection of lower pricing. Anything can happen. Remember, we've got numbers coming out. Here's yesterday's profile. Normal variation day. The upper extreme of the IB is the high of the regular trading hour session. Normal variation, but more of an extreme type of day. Look at where the volume point of control was here. It was the same, kind of the same in the S&Ps as well. TPO point of control here. So a little bit of a normal variation, lower type day. Take a look at gold now. So the dollar was, looking pretty good here this morning. Not so much now. Got a pretty good drop. It's down just slightly off of settlement from yesterday, but that saved the gold from a potential continuation check of weekly kickoff low. We lost 7,000 in open interest yesterday. A lot of folks kind of thinking maybe this upside move is struggling. I'm thinking we lost some longs yesterday. Breakout rules apply. Well, we opened outside of this area of balance, and we've been driven back inside of it. So that gives us an opportunity to look at last week's low as a potential kind of pivotal level. Here's where we went. We had a lot of overnight shorts. Those got scared out relatively quickly. But we're now back in the area of short time frame balance that we've been wrestling with. So if we do get an opportunity down near last week's low, I go with balance and breakout rules. We get down there. If we can't accept down below, we're looking for longs. If we accept below last week's low, there's space down below all the way down to weekly kickoff low, which is 1907. 1907. Got relatively close to it in the overnight. Pretty volatile overnight and early session here. We're still holding a gap from yesterday's range. If we can't close that gap relatively early, we may see this market turn back the other direction. Here's the TPO chart. So here it is. I mean, the market opens with a gap. It has not yet closed that gap. This area of balance here, last week's low, very interesting level. Orion, the better trade locations that I talk about when the market opens in range and in value, when we're looking at the profile, we have what we call the initial balance. And the initial balance is the first hour of trade. On the TPO chart, you can see this lighter blue here. This is the initial balance. It's not finished yet because we're still in the first hour of trade. What that can do, especially if you're expecting a range type day, it can give you extremes to look for opportunities. I don't do anything in the middle. I would look at the highs and at the lows for my opportunities. So there's a lot of context and a lot of market profile information that can help point out trade locations. But again, in the S&Ps, when we're looking like we're going to open in balance and in range and in value from yesterday, I find that waiting a little while, letting the market establish an early range and then focusing on the extremes of those ranges will help me find better trade locations. There's no guarantee of win or a loss in any of this. It just lets us know where the market is, at least for the time being, comfortable transacting two-sided trade. And when that happens, I don't want to trade in the middle of it. I want to focus on the extremes. The TPOs right here, that's the total number of TPOs in the current profile. It doesn't really mean that much. All right, let's move on to the euro. I don't use the number of TPOs in that regard for anything. right. All right. Here's the euro. Again, similar to gold, we were looking like we were going to open below that area of balance. We had an area of balance here. We got an area of balance here. The market kind of indicating that the upside momentum may be slowing, but I think the upside short time frame market is still intact. What did we do as far as open interest yesterday? We added 10,000 contracts, so a much more deep attempt at new shorts coming into this market than we saw in gold yesterday. A lot of new shorts, 10,000 estimated increase in open interest. Balance breakout rules apply. Well, we opened outside of balance, but the market's been pushed back inside of it. Take a look at the 30. Okay, opening below, getting pushed back inside of it. Overnight inventory adjusted. If this day ends up closing above the last week's low, that's going to look like a lot of excess on this low. That's going to look like price got too cheap, sellers wouldn't sell it anymore, buyers came in. That's going to mark kind of an important level. So here we are, back in range, back in value. Going to try and stay patient. If we get an opportunity down here near this previous regular trading hour support level, there's probably some fish here. Where they are is unknown. Are we going to bounce and continue the move higher if we get there? Are we going to fail and continue a move lower? Or are we going to get magnetic? This has been supportive Friday. That's last week's low. Yesterday we found support there. Overnight, a little bit of support, driving lower, coming back, and then rejecting price below that level. If we get an opportunity, a weekly kickoff low there, I would certainly look at it. Here we are, opening, closing the gap. Look at this profile. To double distribution trend day, very weak high, very kind of toothy, unconfident profile. When we have all these little holes and we have these little anomalies, we just returned back through all of those holes and anomalies. Got one little hole left here. This all looks for repair, and it's been repaired in large part so far from the session today. So if we start to accept above this little anomaly or above these little TPOs here, I would expect some repair to happen and to bring price back up to an assumed point of control in the upper distribution that would occurred early yesterday. We do have a weak low here. We have a weak low against that yesterday. We're already showing a rejection of last week's low. So last week's low again becomes somewhat pivotal for us. Here's the 10-year. So again, another change here so far this morning. We were looking at inside extended trading hour range. Balance, yes. Inside extended trading hour range, close. A lot of anticipation in this market. A lot of anticipation. Last week's low is in play. It ended up being supportive this morning. Again, this market is in short time frame control, so short time frame levels are going to be largely respected until something changes. Take a look at the 30. So this morning, before the numbers came out, the market had basically traded to Friday's point of control and the point of control from yesterday. Repair and overnight. We've got a little bit of a change in that. Okay, the market has rejected price from yesterday, attempting to reject price from Friday. We've got a couple of naked points of control up here for the market to go and take a look at. But again, it doesn't really change the overall picture. It's still very range bound, and I'm looking for this market to respect short time frame levels. So this is the TPO. We've got excess on the low here. We didn't have a lot of excess on the lows until now. We're seeing the market continuing to push to the upside. We've got all these naked points of control up here to kind of go and look at. Yesterday's point of control below, and then there's nothing for a while down below. But again, this market is likely to respect short time frame levels, the points of control, previous highs, lows, value highs, lows. There's so many short time frame levels to pick from. If you pick the wrong ones, you're going to get chopped up. So be patient. Again, the market is in balance. Look at this. Be patient. Better trade locations can come as the day goes on when a market is in balance. This is the natural gas. It's looking a little indecisive down here. Small ranges. We got the doji from Friday. Just kind of small ranges. Seems like the momentum may be falling off. We added 1,800 in open interest yesterday, so there's still interest coming into this market. We did close the gap yesterday from Friday to yesterday. Overnight inventory, maybe a little bit short. It's already been reconciled. This is all new coming in here. Have we closed the gap? No, almost. No, we just left a little bit of a gap here. So the gap hasn't been closed. Not really a true late spike, but again, opening below this level. Didn't have a lot of time for acceptance yesterday. Accepting price below that could continue this market lower. It almost feels like this market is a powder keg. We got a weak high here from yesterday. There's some change coming here. I can feel it. I just can't feel direction. It's going to be an interesting day. In all these markets, of course. So we are going to take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Say a prayer for Dan Trader and his brother. Be kind to yourself. Be kind to others. Say a prayer for peace as well. And I will look forward to seeing you all in just a couple of minutes here on Make Hogue Money. Looking forward to seeing our good friend Matt Hoyt and what he's got to show us. And yes, I knew it. Pork bellies. Have a great trading day if I don't see you. After the Make Hogue Money, we've got the Coach's Playbook, and then I'll be back for the reflection at the end of the day if you want to join me. If not, trade well, get out there and profit, have a great trading day, and don't forget to pray.